Okay, hello and welcome to Swarm Community Call. For everyone tuning in on X, please know that the call is being broadcast from Huddle. And if you'd like to post a question or join the conversation later on, you're kindly invited to join Swarm's Discord server and post your questions in stage chat, as X is audio only for you. In today's November's call, the agenda is as follows. First, as per usual, we'll start with core development updates. Next, we'll move to Devconnect recap, and after that, I'll leave the stage to Callum, Ramesh, and Andrew from Shtuka Research, who will dig into the research outcomes on Swarmonomics, the tokenomics in Swarm network. All right, let's kick things off. Core dev update first, and I would like to ask Niki yourself and tell us more about that.
Hello, can you hear me?
Hi, Niki. I can.
Amazing. So, hello Mina, hello everyone. Welcome to the November Sword Community Call. It's great to see you all again and thanks for joining. This month on the engineering side, we've done huge progress towards B2.7 release. So let's dive into where we are and what's been going on. So, we are happy to share that the latest 2.7 release candidate is now live on the public testnet, and it includes all the important planned features and fixes. Two of the key features, multiple underlay address support and AutoTLS, have both been fully tested by the B team internally, and we are now live for publicly testing, or for public testing. These two changes are essential for improving node connectivity, especially in complex environments and for enabling secure WebSocket connections. A key building block for the Beam browser experience. So if you haven't yet, we encourage you to test the latest RC and share your feedback, especially if you are running browser-facing integrations. This month, we've also created our dependencies, including Golang version, lib2p, to ensure P remains relevant with the broader ecosystem and stays secure and performant with whatever this means, with testing, with adapting with all the changes and everything. And alongside that, we've been heavily focused on improving the testing suite. So fixed flaky tests, added extensive new unit tests, and ongoing work on integration tests, particularly around WebSockets and AutoTLS. All of this helps us ensure the quality and reliability of what we are shipping with 2.7. One thing to flag, our recent feeds PR has introduced some backwards incompatibility with feeds uploaded using legacy formats. The team is aware of this, and we are already looking into possible workarounds to mitigate any disruptions for dApps relying on older feedback behavior. And we will share more as soon as we've looked into the approach and have initial positive sides. But for now, I only wanted to bring a heads up to you, explaining what we are working on. So, to summarize, please try the latest RSA covering the majority of our 2.7 features and fixes, which is set also now in public testnet. We are testing, hardening, and finalizing quality across the board, and compatibility is under review to ensure smooth upgrade path for everyone. We're getting really close, and this release is not just about features, it's about raising the quality and reliability of Swarm in general. Thanks again to everyone for testing, contributing, or just staying tuned. Your feedback is always essential, and we deeply appreciate this. Until next time, thank you everyone. Back to you, Mina.
Thanks, Niki. I would like to just once again repeat that if you have any questions, be that for Niki or later on, you're free to post them in Discord stage chat. Now let's move to our next section, which is Devconnect recap related. So last week, Devconnect landed in one of the most crypto-native places on earth, Argentina. And the local ecosystem had long been asking the Ethereum Foundation to bring Devcon or Devconnect to Buenos Aires. And they did. And it's fair to say that the community there more than lived up to the expectations. On the content side, I mean, I'd say the dominant themes were privacy, ZK stuff, so ZK related stuff, and AI meets crypto. This last thing being actively pushed as the next wave for the Ethereum ecosystem. And yet there was a visible gap between idealism and reality, I would say. So the marketing seems to be way ahead of the tech, maybe a topic to discuss at one of the upcoming community talks, perhaps. Yeah. On the other hand, privacy seemed to be one of, if not the key word of the Devconnect, hand in hand with trustless. Vitalik released a trustless manifesto during Devconnect, all of which kind of aligns perfectly with Swarm's values and position. Privacy as default, not a feature, we heard. Permissionless systems as the way to the free internet. All sounded like Swarm's manifesto, and indeed, this return to core values and ideas was kind of obvious, be that as a result of market changes, global politics, or the more narrow Ethereum ecosystem on itself. It all sounded like wind into our sails. I do regret the fact that this community call is happening so closely after the Devconnect, while some key members of our team are yet to return from LATAM, and the impressions and takeaways and actionables are not entirely formed yet. So I'll use this opportunity also to say, let's maybe take another deeper look into this on a separate call, perhaps hosted in Discord. Please let us know what you think about this in the state chat in Discord. As for our team's engagement, we were active throughout the conference, listening, getting in conversations, and moving perhaps less noticeable to the outside observers, but all the more thoroughly behind the scenes this year. We were also present at the very successfully hosted second Cypherpunk Congress a day before Devconnect began. Swarm's founder and architect Victor Tron was speaking there at the panel on Cypherpunk values from infra to apps. This Congress was hosted by Web3 Privacy Now, the loudest actors advocating for privacy in the Ethereum space. And this is also an initiative supported by Swarm Foundation from their beginnings. They were also the coordinators, so the Web3 Privacy Now fellas, of the Ethereum privacy stack on Friday, just before the closure of Devconnect the next day. And we had Swarm Foundation COO Sandor Nagy there to deliver a speech on Swarm as part of the original Holy Trinity of Ethereum. Right after that, Sandor and the rest of the team headed to a side event hosted by our ecosystem allies SolarPunk. And at this point, I'll hand the mic over to Dani here with us today to report on that. We'll also go into more details of the key takeaways from that very busy week. Dani, can we hear you?
Thank you, Nina.
Great.
Let me know if you can hear me.
Yes, I can. The stage is yours.
Okay. So, yes, as Mina mentioned, security, privacy, and AI were the key three focus areas of this week, a little bit more than a week. And in fact, AI seemed to be very much in the focus of the Ethereum Foundation. There are new standards being announced to support the end vision, which is the agentic economy. And this is where Swarm is brilliantly well positioned. We have already announced our MCP connection, and also we have access control on the protocol level. And both of these are essential to realize a trustless communication layer for the agentic economy that is envisioned by most of the members of the community. Mina has already mentioned that there has been a side event organized by SolarPunk with close to 100 participants, and that included a decentralized AI panel. In fact, I think I forgot to mention that there were 3 separate AI side events during the conference. This was most probably the 4th one that was organized by SolarPunk. It started with a roundtable panel discussion featuring Swarm, SolarPunk Data Fund, and Morpheus AI. It was a great discussion. It was moderated by Migle from Women in Web3 Privacy, and both the panel participants shared the same vision of this agentic economy that is about to follow the current wave of the AI agents. And everybody believed that in order to get a proper solution for the end users in the future, different AI agents needs to work together, and that calls for decentralization, and that calls for to protect the context of the users, and it needs a tamper-proof, trustless layer for the agentic interaction. And as I said, we all believe that Swarm is brilliantly positioned there. The panel discussion was followed up by 3 educational workshops. One of them being actually showing how anyone can integrate Swarm using MCP. And the second one was how to decentralize any front end on Swarm, and also how to realize streaming on Swarm. Talking about streaming, we have just announced a partnership with Crypto Mondays, and in fact, the streaming site that was created for Crypto Mondays to stream their various workshops around the globe, it actually debuted with a live streaming from this SolarPunk side event, and we are ready to onboard new partners. So we are starting. Actually, SolarPunk is starting the sales activity to find new partners who would love to use decentralized streaming for their own purposes. Back to AI, we have actually a hash graph plugin developed for the so-called conversational agent desktop, which is basically the one that ensures that whoever is part of the hashgraph Hedera ecosystem can develop an agent, and that agent can interact with other agents. So we have a Swarm plugin approved for that, and it is being integrated into the desktop of this conversational agent, and there is communication to start very soon on that. We are just working on the details of the announcements and communication. Also, we continued on behalf, basically building on our MCP, on the Swarm MCP, and we had a discussion with ELIZA OS, and we agreed that we will be developing an MCP integration with the ELIZA OS ecosystem as well. Going on with what was happening around AI, decentralized science seems to be also an emerging area. That's sort of a special use case where users can share their data for scientific purposes. This is a developing area, and we have a partnership forming with an Estonian university partner, and the aim is to create a secondary health data marketplace for users. The MVP is scheduled for end of 2026, so we are really excited on that one. Talking about other areas where which we are focusing on. One of them being we call it file management, but call it storage and file management. We have established a partnership with Remix, the smart contract coding platform, and we have planned together with them a two-phase project plan. The idea is to integrate the Swarm nodes into the Remix desktop, so users can manage their storage on Swarm. And at a later stage, we are aiming to realize collaborative editing with access control as well. Talking about managing data in general, we had a discussion with Blobscan. We had a testing period with them so far, and we both realized that there is a massive amount of data that would need to be uploaded from Blobscan to Swarm, and we have found a theoretical conceptual solution how to support that, and that would be a great use case for anyone who wants to upload a massive amount of data continuously to Swarm. So we will continue the discussions there. We have also identified a couple of IPFS users who are not satisfied with the tech that they are using. So we have discussed the particular advantages that we could bring to the table, and we are starting the planning of integration projects with these ones. Some of them are Claros and Gainforest. And on top of that, we also continue with 7 more other projects with meetings agreed. So all in all, yes, it has been a very, very busy week. And as Mina said, we still need time to summarize all of our experiences, follow up all the leads. But as I mentioned at the beginning, we are very sure that we are very well positioned with all our features to support AI as a booming economy, and also we have identified many of these key areas where we continued with these key partners, the discussions and the project plannings. So back to Mina.
Thank you, Dani. If you have any questions for Dani, please post them in stage chat in Discord. Please stay with us, Dani, in case you would be needed to answer anything. But let's move now to community talk, which is Swarmonomics this month. The team sees Discord. We're listening and we are taking the concerns about all of what the community writes there seriously. They will be addressed thoroughly and right, but that requires some time. The so-called revival plan is being worked on, as is crucially delivering and improving the production-ready network, because only with substance can we resolve the frustration around financial and marketing markets. There are many interlocking factors, and this call isn't the place to unpack them all. But what is on today's agenda, though, is a research-focused look at Swarm's tokenomics for a start. That said, I'm inviting to stage Andrew from Shtuka Research, Callum and Ramesh. Guys, please take it over.
Hi, Mina. Thanks for the introduction. Let me just share my screen, and you can see I prepared a presentation.
With a click and a clack. Oh, and here it is.
Okay, thanks for the intro. I'm Andrew from Shtuka Research. I've been working on with the Swarm Foundation on this Swarmonomics research project for the past 6 months. We've been looking into basically research and suggesting improvements on Swarm's economic design. Today, I've prepared a short presentation which presents a view of what Swarm's economic and tokenomic design could be over the next year or so. Just to disclaim, the content of this talk is not part of any official roadmap at the moment. It's my personal views. But it's something that I think could and maybe should be, at least elements of which should be introduced into an official roadmap. But yeah, it's my personal views, and there'll be a conversational element where Ramesh and Callum feel free to jump in at any time and engage me on this, or wait until the end and we'll have a conversation at the end about it. And a second disclaimer is that this is not meant to say that other areas of improvement are not as important as this, like obviously onboarding users. This is just purely focused within the scope of what can be achieved with tokenomics and mechanism design, which I think already there's quite a lot of interesting stuff to work on. So let's dive in. If I were king of Swarm, this is what I'd do. In summary, scale staking, ditch the utility token narrative, freeze the price oracle, stablecoin fees, and announce the roadmap. So these things I've emboldened scale staking because it's the most complex and I think also probably the most important. So let's dive into that one first. What is scaling staking and why is it important? Currently, staking BZZ tokens is the only way for a BZZ investor to directly access a share of Swarm's success. If you're a fundamental investor, say like a Warren Buffett type character who's buying the token, not because he wants to flip it to the next guy who sees a tweet by Vitalik and wants to ape in, but someone who wants to hold it for the long term and get value out of that. There's someone who wants to see a cash flow and they just want to sit and get rich off the cash flow, right? And not sell the token. This is the kind of long-term investor which is going to really grow Swarm sustainably in the long term. And the measure of that type of investor because the way that they access this cash flow is to stake. And there's a standard way to measure this, right? The term TVL, total value locked. That's the amount of money that's being invested in this way into Swarm. So one thing that I think should happen is that Swarm community and Swarm team needs to start recognizing and tracking TVL as a success metric of like these types of fundamental investors and then trying to grow it. So let's look at the numbers. Okay, so like not looking that good at the moment. What can we do to improve it? Why is it looking like that? What's not good about it and what can we do to improve? So of course, as we know, Swarm's market cap at the moment is not the biggest, but there's more to it than that at the moment, right? Even looking at it as a percentage of supply, only a tiny number of tokens are staked right now. And the reasons behind this are basically, in my view, that staking is still currently it's too limited. It's not attractive enough even within the community of BZZ holders, and it's too difficult to do. So we got to pump those numbers up. How are we going to do it? Basically, there's two things to do, right? You have to make staking more attractive and you have to make it easier. In more detail, that means enable withdrawals, reduce fragmentation, simplify node DevOps, and separate the roles of operations and capital. The first one's kind of easy, enabling withdrawals. If you're going to put money into some kind of investment, it's much easier to decide to do that if you know you're going to get your money back at the end of it. So the way that Swarm staking currently works, you basically burn your stake and then you have to make that money back off the returns. Those returns are risky, right? So it's much easier to make a decision about a risky revenue stream if at the very least you're going to get your money back, your principal at the end of it. This one's also nice because it's kind of easy to do. The proposals are already PR'd. There's a little bit of work to do, like filling out the details and getting everybody aligned. I did a little poll in Discord and asking node operators, what would you do if withdrawals were enabled tomorrow? And I think unsurprisingly, most people said they put more stake down because, you know, they were holding off and putting down stake because they weren't going to get it back, right? Obviously, that's a very small poll, so we don't really know what will happen, but it's kind of like it seems clear from an incentive perspective. And then perhaps less obviously, there's benefits of this for network stability, which basically means that if you're going to give the stake back to node operators, it also gives you more leverage over node operators to behave in a way that's good for the network. Basically, you can dangle the threat of slashing that they don't get all of their collateral back. And that's how things like Ethereum already work. The next one's a little bit complicated to explain, but it's due to a kind of idiosyncratic feature of Swarm's staking system. It's very fragmented. Basically, when you run a node, you have to attach your stake to a particular neighborhood. That's not exactly how it works, but it's a reasonable approximation for this discussion. You have to attach it to a particular address range in the trunk space. And there's hundreds of those ranges, right? 512 at the moment. So that means all of the stake that we have is split into hundreds of tiny pools. The average TVL at the moment of those pools is just $30. So first of all, if you're talking about trying to make a Sybil resistance mechanism, considered on a per pool basis, that's not very Sybil resistant. But more importantly, from a staker's perspective, it means that if you're trying to put $1,000 worth of stake into Swarm staking, you can't really put it all into one pool because you'll have a massive market impact and you'll kill the yield on that pool. Right? The only sensible way to do it is to split your $1,000 up into, say, 500 $2 pieces and spread it across 500 different pools where you won't have such a big impact. That's really complicated. Obviously, most people are not going to bother to organize that. Now, solving this problem is not super straightforward. It will require a bit of research. Basically, the way to solve it would be to get it all into one pool for the purposes of sharing out revenue. Right? In other words, when you stake BZZ, you're going to get a proportionate share of revenue to your stake among all stakers and not just stakers in the same neighborhood. Broadly speaking, I see two ways to go about it. One way is you redesign the staking system sort of fundamentally so that this is happening at the base layer. Revenue sharing is happening in a global pool. There's some work to be done to figure out how one would do that. It's not totally obvious. Another way is kind of keep things how they are and then introduce an abstraction layer on top so that stakers have the experience of imagining like it's one big pool. And then there's some kind of layer handling in the back end, the allocation of the stake and spreading it across many different locations. Probably what needs to happen is somebody needs to do a little bit of research into both directions to see what they look like and do a bit of triage and see what's the most reasonable way to proceed.
Andrew, if I can jump in, if I can ask you a couple of questions on what your thoughts are here.
Yeah.
Obviously, of course, in full agreement with withdrawable stake, of course. That is a good idea, and we have basically that prepared, essentially, already. For this part, where it comes to how do you actually allocate stake, how does that get handled, where is it most favorable, and equally it also has to be the most lightweight solution possible because, as you say, node operators find it incredibly difficult to do this. Therefore, we get a very low percentage of BZZ that actually ends up staked as a result, right? So it's about removing friction, keeping it fair, and then implementing it, I guess, as fast as we can reach consensus and do the work. But what I'm interested in is the solution here is to redesign or unlink stake from the neighborhoods entirely. And I'm interested in what you think the alternative is. For me, my overall question is, why not just distribute the stake more evenly across the honest revealers? And then that also increases the cadence of payouts to individual nodes instead of the current problem that I also feel, which is you may have to wait around 30 days before you even get your shot at winning a game. And then, God forbid, there's a skip round. Then it's not going to happen. So what do you think of the fair, even split alternative?
I'm not sure I understood the suggestion. Is your suggestion something like when you have a round, it's paying out to multiple stakers instead of just the winner of a lottery? Is that the idea?
Exactly. And then I think this makes your current question or your solution maybe a bit more simple.
I think that's kind of addressing a different problem, actually. Like that's also a relevant and interesting problem. And I'm kind of like on the fence about that. In some sense, I think the lottery system was introduced, first of all, like mimicking Bitcoin, which kind of does it by necessity, and also because of like a gas optimization issue. Like if you have thousands of stakers and you're paying every single one of them every single round, then potentially you're like doing a lot of transaction traffic which you might not have to do.
Very true.
But on the if you don't if you have the lottery system, then as you say, you have very high variance of the rewards, and if you're a small staker, that's kind of a big problem, right?
Yeah, and I only allude to my other thought, in which case the only obstacle to making it low variance, high output of rewards is to minimize the transaction costs, which could be done by simply being on another chain for much cheaper fees.
Right, and also like fees are just generally much less of a problem nowadays than they used to be, right? Like even on Ethereum mainnet, they've gone down a lot. We're all talking about scaling capacity. And Gnosis chain, which is where Swarm is right now, has also historically had extremely low fees. It has perhaps less capacity than something like Base or Arbitrum, but like, you know, fees have been at some points like down in like the Way territory, which is like, you know, basically zero.
Yeah.
So I guess like I just haven't done the calculations to see what that looks like. Another thing that can happen is that, and this is getting ahead of myself a little bit in the talk, you end up, you carry on with a lottery system, and then they end up being like third-party solutions, like basically stake pools. I've used the word pool here, but this is a bit different, right? Like it's a pool in the sense of like like on Ethereum, as a staker, you do have a lottery-like payout, and there are like millions of nodes. So if you're running one node, you are waiting a long time for a payout.
Yeah.
But then if you don't want to do that, you can go through a third party like Lido, who use some, and I don't know how exactly they do it, but I believe they pay people out on an even basis.
Exactly. Let's call that generally like syndication is kind of the economic model of what that looks like.
Yeah, that's a good term for it. Yeah. So I kind of haven't worked through the trade-offs of what that looks like for Swarm, but again, it's like, yeah, that's something to work through.
Yeah, and I'll not go too far deep into that anyway. Ramesh, you got your hand up? You want to jump in?
Yeah. So regarding the withdrawal, so I was wondering, like, what your thoughts are on how it could probably impact negatively the network, and maybe what do you think about some minimal duration? Yeah. So have you had like any thoughts on that?
Yeah. So I mean, this was I kind of always I was expecting there to be some kind of like delay, right? Like some kind of controlled withdrawals rather than instant withdrawals. Although the original SWIP that I PR'd was the simplest possible version, which is instant withdrawals, you know, yeah, as expected, people thought like that's not a good idea, and indeed, yeah, it does seem like a good idea to me to allow the protocol designers some kind of control to throttle the rate at which withdrawals are happening. At the moment, what we've been talking about is like basically a fixed period delay. Where if you unstake, then you have to keep on carrying on participating for a certain amount of time. I don't think we yet reached alignment on what that amount of time should be. But yeah, certainly enough for if there's a mature enough node population to like see that somebody's exiting and say, oh, I'm going to queue up and I'm going to take their place, and like maintain the health of the network. They've got some time to do that, basically.
Yeah. Right. No, makes sense. It makes sense.
There is that.
Yeah. Oh, that's
it.
Yeah, we can continue. Yeah, I'm curious.
Okay. Yeah. So scaling, staking, getting fragmentation. Okay, we've done that. Next one, node DevOps. Pretty similar situation to fragmentation. If you want to scale, if you're a node operator and you want to scale your operation, you have to run 100. Well, at the time I wrote this slide, it was thousands. The network radius just went down, so it's hundreds now, 512 neighborhoods. Hundreds of processes, and each node has to have its own wallet, so you also need to have hundreds of wallets. And that associating with that is sort of a DevOps task managing all the processes, and then a sort of wallet management task where you have to make sure all the wallets are topped up with gas and then sweep the rewards periodically. Okay. Again, that's hella complicated. Not many people are going to do that. And this problem is kind of also not that difficult to solve, I think. We just need to make it, enable getting more people providing more storage capacity on one single process and one wallet. And in fact, you can already do that. You've got this reserve doubling now. And I think it's been, I believe Chert tested this up to 256 gigabytes, which would be 4, which corresponds to setting a parameter reserve doubling equals 4 on your node launcher. I'd say like get that tested like more robustly and make that a baseline suggestion. Okay, if everybody on the network, first of all, everybody's got 256 gigs free on their computer these days, right? 16 gigs is tiny. So it's totally reasonable to, like, you're not ruling out home stakers or home node operators by requiring 256 gigs. And secondly, at the network's current size, if everybody is running a 256 gig node, you'd only need 128 nodes to maintain full replication of the network instead of 2048. And currently, at least like last time I checked this, there was the network's like slightly under replicated, and this just wouldn't be a problem right now if everybody ran 256 gig nodes. So I think that would immediately give us a little bit of scaling and make things a little bit easier, and it would allow people to have access to a bigger amount of rewards, because the amount of revenue you can get from renting out 16 gigs of storage is not very much. And then the last part is maybe something I think that comes a little bit later, further down the road, but you kind of see this in all of the larger cap projects which have staking. It kind of always shows up in various forms, separating the roles of capital from operations, right? Give BZZ token holders a way to not have to run a node themselves, but to hand their BZZ to some professional node operator who's going to run all the operations and do all the IT stuff, and then they're just going to give a kickback to the BZZ capitalists. Okay, there's a bunch of different ways you can do this. Delegation, stake pools, BZZ lending. Those are some buzzwords. It's done in different ways in different projects. There's also different ways that it can be organized. Like you can develop it at the core layer from the core team with some like protocol level solution, or you can just not have that and you can let the market provide third party like higher layers. Again, this is how they've allowed it to develop on Ethereum. Ethereum doesn't have any kind of delegation for staking built in, but people have built liquid staking solutions on top, which allow people to access Ethereum yield without having any kind of IT skill. But so one thing I would say is that this is something that ought to come further down the road than making it easier for people to run bigger nodes, because that has more benefits as well as making it easier for BZZ's investors. Okay, that's scaling staking. Next one, utility token narrative. My view is the utility token narrative has to die. First of all, BZZ token has a good narrative, potentially a good narrative. It's what I said at the start of this presentation, right? You're holding BZZ, you can stake BZZ, and you get a share of the network's revenue. That's an easy to understand narrative, and it's like that's the narrative of shares in companies, and those have been going up since the beginning of stock markets. So let's just keep it simple here. The original idea of utility token was like BZZ token is going to be used for payments. The unfortunate thing is that the users don't want to hold the token, and it's kind of already been acknowledged, because now with Bport, you remove that friction, and customers don't even have to hold the token. They can just pay with a stable coin, and the BZZ stuff gets abstracted away and handled by some market maker. So we've kind of already acknowledged that. So that's not working. I could rant on about this issue for a long time, so I'm actually going to try and keep it as simple as possible. We don't need this narrative, because we've already got a good narrative of earning a return, a share of the network revenue, and one of the reasons you might think that we should be doing a utility token type approach is because if you look at the top 10 crypto projects by market cap, you'll see a lot of utility tokens. So if they're doing it, why shouldn't we do it? Well, there's a number of reasons for that, I think. One of them is that those projects are mega exceptions, which are very, very hard to achieve. And another one is because the fundamental design of those projects, like layer one blockchain, necessitates issuing your own token because that's the only way we know how to make a layer one blockchain. Or you're something like a stable coin, which is probably the, undoubtedly the best payment tokens, crypto payment tokens that are out there, the most popular ones, the most widely used. And, those ones are not ones that you sit on as an investment, right? You move them around, and that's the point of them. I won't go through all the rest of these bullet points unless somebody wants to engage me in a debate about that. It's not fit for purpose anymore. Price oracle. So the price oracle is the thing that quotes the price of Swarm storage. It's quoted in BZZ. The main role it plays is that when the storage is undersupplied and the replication rate falls below its target, it's going to mark up the price of storage in an attempt to attract more storage operators to come and shore up the replication rate. Unfortunately, it doesn't really work at the moment because in order for that to work, there has to be a plentiful supply of node operators waiting in the wings, ready to come in when the price reaches an attractive level. And there just isn't that population at the moment. The node supply is very immature, I would say. So all that's happening, and this has been happening for the last few weeks, is that when stuff falls below the target replication rate, prices just start shooting through the roof for basically no reason. That has kind of a negative side effect as well because it causes people's storage quotas to expire more quickly, which ultimately kills revenue even further, leading to some kind of vicious cycle. So I would say price oracle doesn't work in a price oracle like this can work in a very mature market. We're not there yet, and it's worsening UX. Let's turn it off and just hard code a fixed stablecoin price. Since storage prices are currently dominated in BZZ, you'd have to have an XDAI to BZZ oracle to convert your fixed stablecoin price to a BZZ price. Those are probably available, but you don't even have to do that if you switch over to stablecoin denominated fees at the base layer. But from the user's perspective, as I already mentioned, you basically there already. Users already pay in a stablecoin and get it. The BZZ stuff's sort of handled in the back end. So why not cut out the middleman and just allow users to pay XDAI directly to node operators? And from a node operator perspective, it makes it a lot easier to understand the value proposition of staking BZZ, right? Because instead of staking a risk asset to earn more of the risk asset, you're staking the risk asset to earn cash from fees. And then a minor point at the end is it also means that node operators don't actually have to sell any BZZ. They can just use the money they're getting as revenue to cover their operational costs.
Andrew, I have a couple of points here. So I completely agree with you. I think this is the most important point so far that hinders revenue, product, and UX, which is this price oracle. I am not a firm believer, obviously, in its mechanics at the minute for the obvious reasons. But let's play devil's advocate for the rebuttals that I receive as well for it, which is this is a completely decentralized project. Who are you to say what the fixed price is going to be for storage at any given period of time? You don't have the right to do that, etc., etc. My argument is that even within a decentralized project, that is also a scale, not absolutely. Every single value has to also arbitrarily be decentralized. And certainly in our current stage, I would love to fix it or find something close to just fixing the price at a competitive rate. But what do you say to people that say, well, we need an oracle because no one here is qualified to set a price?
Well, I guess I don't think it's really being decentralized or not decentralized doesn't really distinguish the fixed price from the price oracle approach. A price oracle still needs to be designed, and it still has a parameter, which is learning rate. It also has in the case of Swarm, there's also a minimum price. Again, that's sort of fixed by the protocol designers, and even if this system were left in place, would probably have to be reduced at some point, right? Because if the value of BZZ goes up a lot, that minimum price actually gets pretty expensive. One thing that a system like this does do is, if it's working well, it can reduce how often you need to do an intervention in order to manage basically the market fit of this. If you really do want to make it completely decentralized and try to never do any interventions, that I guess that does take away power from the protocol maintainers, but you could find out you're ending into your decentralized, like, immutable protocol is going somewhere where you didn't hope it would go, where, for example, the price oracles, like price discovery, ends up going into a tiny niche of extremely overpriced storage, which is like never going to break out and never going to achieve a scale that makes it worth all the work working.
So, exactly, because even if you think about it as a product on an adoption cycle, you would hope that you're one of the early adopters, you get the right thing at a low price, and you ride it up, and you say, "Oh, I remember back in the day when I had storage on Swarm, and it cost me, X BZZ, which in today's terms is actually some much larger amount, etc., etc." But here, what we're doing is actually creating a system which is a much higher barrier to financial entry.
Yeah, I mean, I guess that's like right. So that's like that's the dynamics that are playing out at the moment. But like from a philosophical perspective, like you are building a system which is, you're hoping to target some kind of users, right? It's not like completely up in the air and random. Like it's being built by some people to serve some users some kind of service, and the price is part of that, because the price will select those users. And if it's depending on where this thing goes, if it's like if it's not working the way you want it to, you'll end up selecting a very small number of users or no users, right? So I think it's better to acknowledge that, especially when the project is in its youth and has reached a mature market, that you can give it some training wheels, right? Let it find the market that you actually care about, and then later on, these kind of mechanisms can work, right? Ethereum base fee works on a similar price controller mechanism, and it works pretty well, I think. But again, like Ethereum has also had more requirements to be decentralized, even to work at all. It's much harder to do an intervention and changing the design of Ethereum because of the vastly more stakeholders involved. But yeah, it's also got a mature market, so happily their system kind of works. So I think it's a system that could be revisited later down the road. But right now, I think training wheels are the way to go.
True. So so I actually kind of really like that. I think the three slides, like the one before and the one after, are sort of three different interconnected parts, where one is the ditching the utility token narrative, then the turning of the price circle, and the third one, which was the stablecoin pricing, right? And it actually makes a lot of sense because right now, as a user who wants to buy storage, the kind of financial modeling that a user is expected just to store some data on the network, because there is nothing that is actually constant somehow, because then if the BZZ token value is volatile, and then your stamp might expire sooner, so then you don't know when or how long exactly you are buying your storage for. This is like way too much of financial modeling that we are expecting from a user, and I really agree that making that into a stablecoin sort of way would sort of reduce this cognitive load that we are buying on the user. And part of that reason, I think, will also see a greater adoption. And when the network is mature, I think the price oracle can indeed work like it has planned. But until then, it does have this sort of a vicious cycle where it kind of gets harder to get out of because also we don't have new users coming in and buying because the price is also again fluctuating. So it's sort of like interdependent on each other. So yeah, I agree. I think these are very, very good proposals.
Right, and then even in like later on, when you reintroduce the price oracle, again, you will have, as you say, there's this issue of a cognitive load, like how much complexity is a user expected to manage. At some point, that is something that can be abstracted away by, again, an external third party who like manages complexities of like pricing Swarm storage, and then they just offer a fixed price product to users, and that is a cost. Like they'll have to take a fee on that because it's a middleman. But at the moment, there's like, first of all, there's no one who's likely to do that right now, and secondly, a more fundamental issue is that it's not currently serving its purpose of stabilizing supply. So, like that's a more fundamental reason that it should be switched at the moment.
True.
Andrew, my last question on this really doesn't have anything to do with the Oracle or anything in that regard, but just in the sense that to users and to us, this is obvious, right? This is what we want. We talk about this internally, externally, everywhere. We watch the price go up on the Oracle, but I mean, let's have some hard talk. So why can we not change this immediately or sooner, right? So what I mean by that is all of our tech is completely decentralized, but equally so is our decision making. So if we're watching these things that are suboptimal, that we love to change for tokenomics, how can we, in your opinion, expedite this to get the right result and the right tokenomic setup much faster than what we currently implement? I mean, do we do community votes for this and then immediately start implementing? Because what we need here is ironically the opposite of decentralization, which is serious ownership of who's holding these decisions up, and then how do we flip it on its head? So do we just offer these choices up in this deck as community votes and see what the impact is, or what do you think is the right outcome for your insights?
Sorry, I haven't. This is not something I've actually. My last slide is kind of going to be about that, although I don't go into haven't gone into the details of things like community votes or something like that. Again, my perspective is it's the time for training wheels, right? Like going, if for example, if we take the example of like a DAO model, which a lot of protocols go through, where you have to go, a community, you have to go through a staked token holder vote on every change to the smart contracts and every allocation from a treasury. So that model has a lot of strengths and it can be very robust, but it's also very costly. It's much more costly than going through a centralized decision-making process because you have to do all of this. It's a lot of work to get everybody aligned on stuff. I think that potentially, and also Swarm doesn't currently have any formal DAO model. Though there was, I think, one token holder vote, which I witnessed how that played out. I think that as a substitute for a token holder vote in a project that maybe needs to move fast, I think massive transparency about what's happening can be a satisfying substitute. In a sense, I think many, even in a DAO model, many token holders don't really want to vote. They just want to feel like they know what's going on and they're comfortable and confident in the direction. And this is reflected by, even among stakers, extremely low turnout in DAO votes. And I think in from what I understand of the Swarm community as it stands today, of course, this is an opportunity for anyone who disagrees with me to come out and tell me, but simply getting together the people who are in a position to actually do something about this, in the sense that they're writing the smart contracts and they're doing research on the topic and they're contributing and they have the admin keys. and getting everybody aligned and giving a clear explanation of what we're doing and why we're doing it. That's going to be delivered to the community. I think that's just, if I were in the community, and well, I am in the community, but even if I were a passive community member, I would be pretty satisfied with that. So yeah, that's kind of how I see things playing out in my head, potentially.
Yeah, I agree. Actually, I think it's hard to disagree there. So, Callum, yeah.
No, I think that is very, very fair. It's just max transparency, which I think would allow for course corrections or the right voices and inputs to be heard much sooner, because I do feel that, you know, a lot of these things we watch happen over a period of time, whereas we could intervene much quicker with more voices.
Yeah, and it's like, it's always a tricky trade-off, isn't it? Because like there's like, you know, sometimes doing more research and thinking about it harder does uncover stuff that you didn't expect and unintended effects. And that save you from doing a course correction and then having to correct back again when an unexpected effect showed up. But yeah, it's just like something that you have to keep trying to optimize, and also keep trying to engage people in the conversation, in the like, you know, yeah, make sure everybody knows what discussions are being had, and allow people, like explicitly allow people opportunities, even those who are like maybe spectating the calls instead of like speaking, to jump in and like voice their opinion and have explanations to their answers to their questions delivered. And you know, you may get some valuable ideas that way. So. Okay, shall I move on then?
Yes.
Okay, so this is basically the end now. That's all the changes I was going to talk about. Then there's this, coming back to the point about transparency. Doing all that stuff will take some time. Some of it can be done, I think, pretty quickly, and it's not that complicated. Some of it requires a little bit of research to figure out what is the right way to go about it and how can it be done safely. But we can still get everybody aligned about it like sooner rather than later. And the good thing about markets is you can even like fast forward the token price to like if the market is going to react to these changes, and I think, you know, potentially it will, because this is going to make BZZ basically into a more investable instrument. You can back out all of those changes into the price today, because people will treat the token in terms of what they think it will become, what the intention is for it to become. So yeah, everybody should get together and figure out which of these things they want to do, and they should announce a roadmap. And it's official. That's the intention of the core team. We're going to make it like this, and then everybody knows what they're holding on to when they've got a BZZ token. And then that has the benefit. There's more funding available as well. If that results in more investment, you have more funding available to actually execute on those plans. So tokenomics roadmap, I think, is a very important thing to work out and announce sooner rather than later. Okay, so that's basically the end. We talked a little bit about this already. You sort of preempted this question. How do we turn this from potentially just my sort of dream idea of what Swarm tokenomics could be into something that actually is going to become a reality? Yeah, get everybody who might be in a position to do something about it on board, figure out which changes we all agree about and which ones maybe a bit more controversial, figure out which ones take longer to do and cost more and which ones are cheaper, and then put them in an order and talk to the community about it and announce it. And I just did a mock-up here of something that might looks pretty cool to me. Just to doubly labor this point, this is not the roadmap. This is just something I made up, which I think looks like kind of a cool roadmap, and I didn't even think about it for that long. But anyway, you can maybe look at this and imagine what your own roadmap looks like, and then we can talk about it and find something that everybody likes. And that's the end of the talk.
Thanks, Andrew. Actually, this was a really refreshing presentation. So I want to thank you for the effort and all the work that went into it. Really interesting proposals, and I do hope they come to fruition. Callum?
Likewise, I agree with absolutely everything, which is just a very easy presentation to get through. Always, instead of disagreeing with a lot of things. So I would love to see a roadmap basically look identical to that, if not just a slight reshuffle, but completely. And the main key takeaway for me is just to come to the middle ground decision making against decentralization as a dogma here, to actually gain the benefit for what the protocol needs. And that's what I'm looking to see come to fruition as well. But yeah, thank you very much for your time, Andrew. This was great.
Thanks for having me. Thanks for your great questions.
Thanks also from my side, Andrew. I'm very, very happy also that I see somewhat of a agreement on the spot on something that kind of might sound controversial, especially in the framed against this whole decentralization narrative. So thanks for coming and sharing this with us. I think it was a super interesting call. We are, oh my God, right, or I guess as a Swiss clock at 6 p.m. Central Time. And I would like to conclude by, again, inviting everybody who wants to prolong this debate or ask questions for later time, like they will be picked up at some point, to please go to Discord channel, Swarm's Discord server, and go to either stage chat or continue in BZZ Tokenomics channel. I'm not seeing questions in stage chat at this time, but I'm pretty sure they will come up at some point. And I will finish off by saying that next month we will not be hosting a Swarm community call on the last Thursday of the month, as always, because the last Thursday of the month is Christmas Day. And instead of that, we'll do what we usually do in December, which is a solstice special edition Swarm community call. And it will be broadcast on 21st, on the solstice day, obviously. So see you then on the 21st of December. Thank you, everybody, for joining.
Thank you.
Thanks.
Thank you.
Working with that trading group for almost 3 years.